G'day folks, and welcome to a Check on Chain update for the 3rd of February. And there's blood in the streets. Bitcoin's breaking down. We got down to 92,000. Altcoins are getting absolutely slaughtered. So what we wanted to do today, because over at the Check on Chain project, we basically released everything behind our paywall, and we haven't done a free video for our YouTube audience in a while. So what we've done is presented, this is part 1 of our 2-part series, trying to just understand what exactly is going on from my perspective. And part 1 is going to look all at kind of the macro drivers, what I think is actually behind this current price action. And then part 2 is going to dive a lot more into the Bitcoin mechanics and how bad is the damage? Is it enough to break the spirit of the bulls? How low can we go? And what my just general view is for a more Bitcoin-centric perspective. So all of it is relevant, but we wanted to release some content for our free YouTube audience. If you do like this particular material, let us know. We also have a link. We've got a free trial that's going, so you'll find a link in the description below. So there's a 7-day free trial. So if you want to see the second half of the video, you can head over to the Substack and see it there. During these chaotic times, we want to make sure we give people a bit of information to just try and get rid of a lot of the noise and try and filter out some of the signal, at least as best as we can see it. So I hope you enjoy this video, and we'll catch you over at the Substack. Cheers. Now, where I want to start this whole thing, this is the weekly Bitcoin price chart. Let's just start with a breathing exercise and look at how the market is currently trading, right? If we look at it on a weekly basis, as far as I am concerned, and as far as my, let's zoom out. I know it's a cliche, but I'm going to zoom out. This to me looks like a rally sideways, rally sideways, rally sideways, rally sideways, rally sideways, right? So we get this choppy periods as the market consolidates and refines its level. Now, we talked about last week the law of large numbers, this idea of like the realized cap being the place where the market wants to mean revert to. That is the capital being invested. Most of the capital does not get invested during the rallies. Most of the capital gets invested during the chop solidations. So there's this period where the market goes to a new altitude and then has to prove it belongs there. And that takes time. It takes a process, right? Markets are a process. Now, I personally use Twitter as a gauge for sentiment. And just, I use it to kind of see where the general zeitgeist is. And what I can, from my interactions this morning, I've been shitposting all morning, what I've generally got is this kind of 2 camps of people. And I think this is a perfect summation of pretty much everything you're about to see in this report. Bitcoiners seem relatively unfazed. People who are maybe Bitcoiners but probably have a little bit too much alt exposure, diabolically bad. Really, really bad. This divergence, I think, is really, really important. Alts have been slaughtered, right, during this whole process. I don't know if this is the capitulation bottom. We'll talk about alts at the end of this episode. But as far as I'm concerned, this is part of the choppy process. Q1 is probably going to be like this as the world kind of adjusts. But generally speaking, I believe Bitcoin is in a far better position than pretty much everything else. That doesn't mean we're not going to go lower. Doesn't mean we're not going to chop around. This is all part of the journey. And I think learning to enjoy the journey is important. Another big piece of feedback I see is people are saying, oh, we're only 40% above the previous cycle's all-time high. What a shitty cycle. Boo-hoo me. When I look at that, to me, there's many lessons you learn when you spend time in markets. The first one is do not take your expectations of what should be and assume that the market has to follow those, because our expectations are often what we want to happen. The market just does what it does, and if it doesn't align with your expectations, and this is why I generally think in markets you should hold your expectations loosely, because if you see data that's telling you might not be correct, you keep applying. It's like natural bias. We keep applying what we think should happen rather than allowing the information to tell us what is happening. Now, a lot of people's expectations are we're going higher. And by the way, my expectations are that we're going higher. I do think that Bitcoin has a positive 2025. That's still my base case. However, it's not just going to keep rocketing upwards. The law of large numbers is that we need to have these processes of chopping around, finding that equilibrium level, and then we can move. And most often in markets going down is like a slingshot. You get this massive capitulation where people go, that's it, bear market, it's over. And they take their expectations, that was a shit cycle. We didn't have enough gains, boohoo, or come back in 4 years. That's their expectation. What they don't realize is that could actually be correct. They just didn't understand that it's going to take longer and be more of a process to get there. So that's the way that I like to frame these things up. To me, this is a consolidation within the current choppy range. Can we go lower? Of course we can. We'll explore that at the end of this episode. But for the most part, chill out. Take a big breath. We're still up in this chop consolidation range. Really, nothing has kind of changed in the near term, at least when you zoom out. So let's start zooming in. Now, what is driving this whole thing? Well, I think obviously if you've been on Twitter or you're kind of following news, it's probably a lot to do with tariffs. The world's trying to work out how serious Trump is. Oh, wow, he actually is serious about what he's saying. And what we've seen, really, since October, September, is extraordinary strong US dollar. Check on Chain as a business actually stacked sats this morning because we got close enough to the short-term cost base that we took a little bit of a nibble. And when we look at the, I looked at the Australian dollar because I remember buying a couple of months back, and we are about 5 or 6K lower on the US dollar exchange rate than where we bought a couple of weeks back. And yet it is much higher. It's about $10,000 higher on the Australian dollar. The Aussie dollar has been so killed in this period of time because of dollar strength that our AUD purchase price was higher despite the fact the USD price is lower. So remember, Bitcoin is a global phenomenon. It exists everywhere in every fiat currency. The gold price, priced in Australian dollars, is just a straight line up for my whole life. It's basically never had a bear market. But in the US dollar, it's chopped around. It's had bear markets in 2016 and 15. And in Australian dollars, it kind of goes sideways to up because the Aussie dollar got killed way more than the gold price did. So remember, the world is a global place. What I've got here is the DXY in green. And I've got down the bottom here is just the 90-day change in the DXY, right, on a percent basis. Now, we're actually pretty high, right? 7.6% in December. It's cooling off, but again, we're getting this period of strength, so 5.5% in the last 90 days. We've got a similar period here. This was the 2020 rate hikes. We had another one back here in October 2023. This is when interest rates were pushing higher towards 5%. We'll look at that in literally the next chart. And back here in 2018, this is a kind of in the lead into the Powell pivot. So back then, Jay Powell, they were raising rates and doing quantitative tightening. It was called the Powell pivot because as the market started to sell off, they pivoted everything and said, oh, well, okay, no, we're back to QE and right, we're slowing down autopilot and all those things. So dollar strength, at the very simplest terms, if we're looking at BTC to USD, it's a pair. If the denominator gets stronger, it's harder for the numerator to keep going, right? So all assets are going to suffer from this. So a strong dollar is going to be a point of stress for everything. Now, what is the cure for a strong dollar? A strong dollar. Because a strong dollar wreaks havoc on everybody, right? You can't pay back your US denominated debts. There's countries and companies and everyone struggles with a strong dollar. So this is a concept that I use quite a bit when I'm thinking about macro markets. Where does the market want to go, the gravity of the situation, and what is the managed outcome? Because we obviously don't live in a free market. The gravity, in my view, is Brent Johnson's dollar milkshake theory. The dollar wants to go stronger because the American engine of economic prosperity is the biggest engine in the world with few equals. At the same time, as the dollar goes stronger, it breaks things. And this is the Luke Gromen side of the equation, which is that if the dollar gets too strong, stuff starts to break, so they have to weaken it. So in the immediate term, a strong dollar is bearish risk assets. But the dollar cannot keep going higher and higher because it will break everything. So the managed outcome is they must weaken the dollar. So all of this near-term noise, if you actually turn off the video after this comment, you've probably got most of the story. The near term is that the dollar is going to cause everything to go lower. In the medium to longer term, personally, my conviction is that they have to weaken the dollar because otherwise shit breaks. So, and if that breaks, they'll be forced to weaken it anyway. So we're going through this near-term choppy process. I do suspect the dollar is going to have to be weakened eventually. And as a result, right, Bitcoin is probably going to do just fine during those periods. Dollar weakness periods is usually when Bitcoin actually has some of its most spectacular returns. Now, keep an eye on the gold and Bitcoin price, by the way, because even though we're pulling back today, it is amazing to me that we have just continued to chop around this 100K zone. It's incredible. I think the amount of demand that's here. Same for gold. Gold is only just pulling off its all-time high. You know, maybe this whole thing goes into a bear market, but we're going to have to wait and see. At the moment, my conviction is that's probably not what happens. But I do think that those sound money assets, it makes a hell of a lot of sense in this current tumultuous period, right? The world needs a new reserve asset. Now, to kind of touch on that, this is looking at the Fed funds rate in white and the long bond yields, right? 10-year, 20-year, 30-year. This is the bedrock of the financial system, the long bond. During those periods, the Powell pivot, we had strengthening, right? Rising yields means lower prices in bonds. Lower prices in bonds, higher yields create stress. People have higher borrowing costs, so on and so forth. That's what creates stress. So we have the Powell pivot back here. Again, not massively strengthening, but strengthening nonetheless. We had the rate cuts, obviously significant strengthening. Here's October 2023, where the 10-year almost touched 5%. That was, again, a breaking point. And here we are again, strengthening bond yields, weakening prices, higher yields raises the cost of capital, not enough buyers for those bonds, again, creates that point of stress. So macro scale, the dollar and treasuries, higher dollar, higher yields, it's kind of that simple. They are the things that are driving a lot of this pain. I do believe that is yields is much harder to call, and I don't personally have the experience to know where yields go. Using that dollar analogy, my belief is that the gravity, the unmanaged hands-off scenarios, that yields go much higher because the governments are broke, right? You need to charge a higher premium for the government to function, and these deficits are insane. So the gravity, I believe, is up. Whether they manage them higher or lower remains to be seen. I think they probably don't want them to go too high, but then they've got to find buyers for them, and that's a whole different ball game. But my belief is that dollar will eventually have to be managed lower, and yields will probably not be allowed to go to 10%, right? Where the gravity wants them to go. I don't know if that's a feasible thing. I think they probably have to bring them lower by some or another mechanism, alphabet soup, whatever it is. So that's my kind of base case. So I think a lot of this is going to be a temporary phenomena. We're going to go through this Q1 choppy period, but I think that Bitcoin's going to be just fine on the other side of this equation. One thing I don't believe is that altcoins are going to be just fine. Now, I'm not going to pontificate on them because it's not my edge. I don't have any edge in alts. But when you have a higher cost of capital in general, this is what the sound money thing is. If money's more expensive, you're less willing to punt on stuff that is kind of speculative. So I think that alts probably, my view is that they're not in a good place. And obviously the price chart tells us that. We'll talk about that in the last chart when we talk about dominance. Okay, so that's kind of the macro backdrop. Now I want to just put things into perspective. Now I would believe most people would say that 2023, this is just from the 1st of January 23, this is our cycle. And this is the exchange rate of major currencies, right? We've got the pound in purple. Here in green is the Mexican peso, which did really well up until mid last year. This is the exchange rate versus the dollar. Up here we've got gold, absolutely kicking ass, 155% versus the dollar over that 2-year period. So sound money is doing fantastically. No complaints, right? Cry your tears and cry into bags of money. If you hold sound money, you're doing just fine. Now, coming up to October, September last year, this is when the election is coming into view. The odds of Trump starts to become more likely. We got a weakening. This is that DXY climbing. We got a weakening in the pound, in the euro. The yen was already quite weak, but basically everything started weakening quite a bit. And really, only the pound out of the major currencies is 1.02 relative to that 2023 benchmark. So basically, everything is doing much worse. Here's the poor old Pacific peso, the Australian dollar getting absolutely trounced. So basically, what we're looking at is currencies are not doing great, right? The US is kind of the center of the economic engine here. And these tariffs are only going to strengthen it. Now, again, I think they're going to have to manage the dollar lower, so we'll see how this chart evolves. But let's now plot Bitcoin, right? It's really hard for me to be too bearish when the returns have been 600%, gold's 155%, right? If you're holding fiat currency, yeah, you get wrecked. If you're holding sound money, this is what this stuff is built for. So I have a very high conviction in gold and Bitcoin. I'm just not that concerned about it in any medium to long term. We're just going through the process of the world adjusting to what was kind of obvious, right? There's going to be change. Markets don't know how to price change initially. It's got to go through that process. Once it gets there and it finds that grounding, I think they're going to have to manage all these things. And that managing is going to result in the fiat debasement and the printing and all that fun stuff that we all know and love. Bitcoin and gold are the things that are going to benefit here, right? Neutral reserve assets. This is the Luke Gromen long-term thesis. So this is looking at the drawdown from all-time high for a bunch of assets. Bitcoin here in the shaded area in orange, gold in the green, probably should be yellow, but it's green. Stock market in blue and red for the NASDAQ and the SPX. And then we have down here is toilet paper, TLT. This is the long bonds, so 20-year plus TLT ETF. You know, when we look at this whole thing, the market's freaking out over this. You know, the market's freaking out over this. Really, they should be freaking out over this, right? The long bond's down 42% from its all-time high. It got absolutely smashed during the rate hikes of 2022. This is the problem down here. The bonds and the strength of the dollar, they are the problem. You know, folks are crying over stocks being down 5%. It's kind of amazing, actually, that we're seeing in the stock market, people are so sensitive to any kind of drawdown. Like, you know, come find me when we've had an 80% 3 times in your existence, right? This is what Bitcoiners have been forged for. So this is why I think Bitcoin is just in a different world. I would say that alts probably look even worse than TLT, to be honest. I should probably build like an alt index, which just goes off the page. It's just really hard for me to be too scared about Bitcoin at this point in time. I think it's in a good spot. It's going to take time. Right? It's going to be a bit of a process. So, you know, I just don't have that many major concerns at this point in time. And now we'll jump into why that is. Okay, so talking about the Bitcoin price action, how it's performing, where it's going, I want to just bring in this simple pricing model.